There's roughly 4.5 billion people out there who don't have a job.
Yeah.
They spend somebody else's income. That's where Xare comes in, right? It's the equivalent of a Wi-Fi router. The tagline we use for our product is a billion banks, right? But that's what it's going to be. It's going to be a billion individuals extending their financial access or becoming the bank for people around them. Life as an entrepreneur is all about piracy, right? You take a raft, you put it together, you incentivize people to do things, you jump in the water and try and make something happen.
Welcome to the Change Officer podcast. Today we'll be listening an interesting story about disrupting financial industries. When Tesla wanted to produce cars, everybody was laughing, because there were attempts to build an electric car from some big players in automotive industry. But then the guy who started PayPal, the guy who wanted to go to Mars, started producing cars. And he disrupted the industry. Today's story is something like that, but in financial sector. Before we jump into the story, make sure to subscribe if you are watching us on YouTube or follow us on LinkedIn, Instagram, or wherever you watch us. So, we welcome our new guest to the Change Officer podcast. Okay, Milind, thank you very much for coming in the Change Officer podcast.
Thank you for having me.
Milind, we had amazing conversation before the camera started, so let's pick up where we stopped there. Because usually the first question we ask our guests in our podcast is, what is the change for you? When somebody tells you the change, what is the first thing you think about?
Generating momentum or changing the pace at which you're going, right? Inertia. Changing the pace at which you're moving or stopping the pace at which you're moving, right? Changing the status quo.
That's it. So basically you don't have to be standing, you can move, but if you want to move faster, there is...
Or if you're moving too fast and you need to stop, that's also change.
And the change is hard.
It's very hard. It's the hardest thing there is, right?
Yes, and of course, with the changes you had in your life, being in a big corporate world for so many years, like 10 years in Booz & Company, and almost becoming a partner. What made you make that change? Why did you pull a break on corporate life?
So one of the most defining projects I landed up doing in my life was I landed up doing some work with Facebook out of their Menlo Park office, right? Mm-hmm. Which was around building the formula to connect the unconnected, right? So they wanted to bring everybody online, but it's not a given. And when I was working with that organization, I realized the power of builders, right? So everybody who reports to the C-level there is somebody who has built stuff, not somebody who has advised on it, consulted on it, analyzed it, but somebody who has gone and built stuff. And I realized that, I've been toying with entrepreneurship, the idea of doing something on my own for a very long time. And that was the point at which I realized that, look, you need to go and do something and build something. That's the only thing that's going to matter in the long term in the world, right? A phrase that the Silicon Valley uses often is, the future is already here. It's not evenly distributed, right? And so when I was there, I saw what the future was. The future was about building things. The future was about making things happen rather than about, trying to do the incremental stuff, making new, keeping on doing what you're doing, analyzing more, assessing more, doing more PowerPoints. So that was a big driver in me to say, look, now is the time to move and start building stuff.
You want to say that Facebook as a company inspired you?
Working with them, working with the leadership there inspired me because I could see how much value they put on building stuff and making things happen, right? Rather than just about analyzing and assessing. Because look, even in Facebook, there are all kinds of individuals, right? People who sort of are focused on building new products, people who are focused on optimizing what already exists, right? So the builders really inspired me. The fact that it's an audacious dream to have, right? An ambition to have. I want to connect everybody in the world.
Yeah.
That's an incredibly audacious bet to have, right? And when you go and work with a bunch of people who dream like that and say, why the hell can I not bring, all 7 billion people online? You realize that, look, there's so much more power to going and trying to build things and make things happen rather than just sitting and, doing more decks and doing more presentation and doing more slides. And that's what sort of triggered the move to entrepreneurship.
When you went out the corporate world, and I'm sure when you were in the big corporate world of consultancy, and what did you see there? we want to inspire people. With this podcast, we want to inspire people not to be afraid of the change, to change the status quo, it always hurts, but we want to inspire people even to do it. What did you realize about corporate world? Like people like sliding through the corporate world, not making any difference or.
So the hardest thing always in the world, right, in any organization, is to create, to change what is happening and to create momentum, right? So even in corporations, right, it's very easy for a corporation or companies to continue doing at the same pace, right? I mean, you could pretty much argue that if the current banks or current large tech companies or current large, telcos, they basically decide to give the management an entire month off, the revenues will not drop. Yeah. Because people will keep calling. The product is there. Everything is good. It's happening already, right? So they don't have to generate any momentum. And in the corporate world, right, that's what you get incentivized for. You get incentivized not to create momentum, but you get incentivized to sustain the status quo. Versus when you go to a new organization as a startup, there is no momentum, right? The day you open the office and say, I'm going to start something, you don't have a customers, you don't have a product, you don't have a brand, you don't have a website. There's no coffee machine, right? Everything is something you need to make happen, right? Everything is something you need to have, create on your own. And that's the biggest challenge about change. That's why change is so difficult, right? Because, even if you start doing, and as a startup, you start adding one customer a day, that is the pace at which, you know how to do it. You'll do it same over and over again. But then you have to go take it from 1 customer to 10 customers a day. That's about generating extra momentum. 10 to 100, 100 to 1,000. And that's why it is so tough. That is why, change is so tough, because that extra momentum, nobody teaches you how to generate it. You have to do it on your own, learn on your own.
I learned that the hard way, and I'm learning that every day the hard way, and somehow, we mentioned, like when the consultancy company comes into a big corporate, there are some people there, they do some analysis, some research, some advice, and that's it. Somebody makes a report and we improved something and we are making. But then, as you said, in startup, in entrepreneurship, you don't have a coffee machine. You have to have a paper. You have to do this and that. Those are fundamentals. Yeah. But somebody has to do that. Yeah. When I started living on my own, I realized nobody will wash the dishes if I don't do it. Of course. So this is basically it. So what was the first step? What was the reaction of your immediate friends and family? That knew that you are leaving this prosperous position, like you were principal in Booz and Company,
So I think they were, I'm the type of a guy who spends a very long time with any corporation I joined, right? Even before Booz, I was for multiple years with the same corporation. So for them, the fact that I was sort of taking this plunge into entrepreneurship and starting something, they were a bit nervous, but they were excited. They thought, that, you're going to go out, you're going to make some things happen. Things are going to go like that. But then, we start doing the grind and you start realizing, every day is about getting the basics in place, trying to make, small little things happen. My family was, my wife and my kids were very happy that I was going to be home more. Yeah. But as a consultant, I was flying all over the world. But very quickly they realized really I was not home that much. Because I was spending all my time in the office trying to make things happen, and that came without the perks of having a salary and without having any protection, right? So it wasn't easy. They didn't understand why would I do this. I was, already at a stage where life was reasonably comfortable. I could have just coasted, right? I could have just done that.
What inspired your first venture? What inspired your first venture? Your Rise. How did you start with that? Did you have that idea even when you were working in Booz, or like was it cooking for some time, or?
It was cooking. So for me, Rise really, right? So my wife, who's also one of the co-founders in the business, she used to be a banker.
How is that? Tell me about that. Sorry to go on another part, but how is that? Are you operationally working together? Or?
Yeah. We are both.
How is that?
It's good and it's
she's
bad.
watching. She's watching this.
It's
podcast.
good. It's good
I'm
and
sure.
it's bad, right? It's good and it's bad. So I think the good part is, it's incredible how many startups suffer from founder conflicts, right? It's really, because you start something together, as it is tough, and plus, people may want different things. So it's great to have somebody along the journey who you explicitly trust, right? You're like, you can trust this individual 100%.
Trust, yeah.
But then the hard part is, two parts, right? The first is the work never stops, right? It's not like, you can, go home and shut your laptop and the work is done. You're always continuing, to talk about work and do things around work. And secondly, and quite ironically, right, a lot of investors don't look favorably upon couple-based startups. It's changing now, but a lot of investors see a risk in startups which are founded by couples.
Oh, really?
Yeah.
That's a new thing.
I don't know why that's the case, but that's been the case. So we have had these conversations with a few investors.
Rise was and is successful.
Yeah, I mean, but
can you tell us a little bit about Rise? Let's go back to that story. What Rise is?
So what Rise is basically a financial services platform for migrants. So migrants, both of us are migrants in this country. We leave our homeland, come over here. We, earn locally, and we may have dependents back home that depend on us for A, B, and C. And what lands up happening is, most cases, migrants at the bottom end of the pyramid, modest income migrants as we call them, land up sending money back home, right? The family gets the money, they keep on doing this for 10 years. After 10 years, they haven't saved anything, they cannot retire, they cannot get access to loans, credits, all the rest. So we started Rise to bring true financial services down to the masses, right? So we wanted to be able to give migrants the ability to manage their finances cross-border in a very simple and easy manner. And we did this with partnership with companies, banks and financial institutions here, and banks and financial institutions in their home countries. So we started with a simple bank account proposition, because when we started in 2017, nobody was giving a no minimum balance, no minimum salary bank account.
Yeah.
Right? Either you had that or you didn't. So we started with that as the first proposition. Then we layered on partnership with Xare for insurance products. Then we layered on partnership on credit, so you can buy things over here on installments or for your family back home. On installments, investment and retirement planning. So think of the entire financial services stack, but done specifically for migrants, people who have footprints in multiple countries rather than one country.
Yeah, but working on that for good 5 years, you realized that there is one disruptive opportunity, and I know that maybe you don't like calling your new venture Xare a fintech, or it's a kind of different fintech. What is the difference between fintech and Xare, which is also financial services, but what is the basic differentiator?
Yeah, so maybe if I talk a bit about how Xare came about, and then I can sort of explain how it's different, right? So one of the things we had not done in this journey is we had never built a remittance product, right? So we had partnership with other remittance providers, and our view was that remittance is a solved problem, right? So we didn't want to go and build another product compared to so many else that already existed. And what we realized was the following, right? All the remittance products that had been built till date have been optimized only on two layers, right?
Yep.
How much time does it take to move money? How much does it cost to move money?
Yeah.
But there's far more than that, right? So, and when the COVID crisis happened, those challenges came to the fore. The first simple challenge, right? Doesn't matter if I have a bank account here. If my family back home is getting paid in cash and it's COVID, they cannot get access to the cash. All the shops who take the cash out, and they cannot spend cash, right? So my access is not being shared with my family back home, right? They're spending in cash. I have an account. And secondly, I have no control and visibility as a migrant to where the money is being spent. I send them the money, they have full control and visibility, and I don't know where the money is going, right? So that's how we sort of saw an opportunity to reinvent remittances, right? And we built Xare. What Xare does is something quite simple. Instead of moving money, it moves access to the money, right? It allows anybody to share their financial access with anybody else in the world, or from a simple app based on purely a phone number, right? So I have a bank account or a credit card here. I'll share my access with my family sitting in India, and they can spend from the same access without me having to send money across, right?
So, but it's basically a remittance without remittance at all.
It's supporting the spend without remitting the money.
Yeah.
Right. So it's supporting the spend. And if you think about it, that's when we built this, right? We realized something quite basic. Migrants are a specific case of a very broad general problem. And the broad general problem is the following. All financial products are designed to work with people who have an income.
Yeah.
A loan is supposed to, look at your income and say, I'll give you X, you pay me back later. Investments are supposed to be, you save 1% of your income and spend later. Insurance is about protecting your income. But the reality is only 1/3 of the word works. 2/3 of the word, right? Only if you look at the global population, only about 3.5 billion odd people actually are employed. Right? So there's roughly 4.5 billion people out there who don't have a job.
Yeah.
They spend somebody else's income.
They're supported,
They're supported by somebody else, right? And financial products don't work for people who don't have an income, right? So what's the challenge there? The challenge is there's no mechanism for the income earner to be able to share her or his access with the family or the friends that depend on them in a seamless manner. There's no product that exists like that, right? There's no product which allows this sharing to happen. And that's a massive opportunity, right? And the way we compare this is we look at the Wi-Fi router. Imagine that there was no Wi-Fi router.
Okay.
Imagine that if you wanted to buy a SIM for your laptop or connect the camera or connect this microphone, you had to go to Etisalat and say, please give a SIM. Right? Here's an identity, please give a SIM.
Yeah.
That is how finance today works. Every time you want a financial product, you go to a bank and say, please give me a SIM.
Yeah.
Or a fintech and please give me a SIM. Right? But in reality, what you need is you already have access, right? You have a broadband line coming. Yeah. All you need is just a router which lets you direct the access the way you want. So that's where share comes in, right? It's the equivalent of a Wi-Fi router for income earners to take the products they already have and distribute it among people they care about in an easy manner.
Yeah, your router is managing 2 rooms with strong walls because saying that you want to share money with India or with Serbia, you have to have the opportunity. So basically, I downloaded the app. I didn't set up the account. Okay. But in general, my question is, so I download the app. My mom downloads the app, and she can go like with any Google Pay, Apple Pay service and just pay in her market with my money.
So in India, you can do that on UPI. Right? But in other places, you can do it online. So she can go to Amazon, whatever the other local equivalent is, and buy online whatever she wants. And we are working on bringing it offline to multiple markets. But right now, it's only offline in India.
How hard is to get another market on your...
Online, very easy, right? We launched it in Jan. We are close to 500,000 downloads across 60 countries. Oh. So online is very easy, right? I mean, I can just enable a country and we keep on adding more countries all the time. Offline is basically about going and looking at what the payment rails there are and working on top of that, right? And that's what we're working on.
So you need to make some kind of an agreement with the local banks or local authorities, no?
No, not
for to be able to use that as a card.
In offline, you need to look at. So I'll tell you why offline is a challenge, right? Offline is a challenge because you remember in the old times when people used to swipe credit cards with the big machines.
Yes.
There was a phenomenon at that point in time called card cloning. So people used to take your card number, generate their own card and go and run around with it. So sometime in the 80s and the 90s, the credit card companies came up with a regulation around card cloning and said it's not allowed. So now, if I want to spend your card offline in Serbia while you're sitting over here, that is seen as card cloning. So we're still talking to the schemes to figure out ways around it, but that's a different discussion. But now when you want to spend it on UPI in India, right, that's not the spending on card, it's on a different rail.
What is UPI? Sorry.
UPI is a QR code based system in India. You can scan a QR code and pay.
Okay.
So it's the widest, the most widely used platform in India, massive, 2x, 3x of volumes of card spend. And so you run off that and then you add other markets as you go along.
So you, because of the old regulation, you cannot do this?
Not yet. I mean, we'll solve for it, right? It's not, technically I can do it. Technically, I can literally give my card to my family in India and they can go and this thing. But look, technically doing it for, 10 people is different from doing it for 50 million people. Right?
Yeah.
So you need to sort of be aligned with what's happening. So we are working on it. It'll take some time, but we'll solve it.
Yes. What do you think the future brings in fintech industry, in technology, and in how people will not only transfer but operate money? Like we have a lot of directions, like how the banks are digitally transforming, how online digital wallets or digital fintech services are evolving, and then there is crypto. What do you think the future holds for that? So when we do another podcast, let's say in a year or two, Just what are your expectations about this industry?
I think, look, it's one thing is very clear. It's going to be more decentralized, right? And the decentralization is coming at multiple layers. But before we jump into that, right, let's look at how finance operates today.
Yep.
The irony is the following, and this is a controversial statement, right? But banks are nothing but operators of central bank assets. They don't have their own assets.
Yeah.
What do they have as an asset? Right? I mean, branches are not an asset. It's like a way to service a customer, right? Technology is not an asset. It's like, anybody can have the same asset. What makes a bank is the fact that they have
regulation.
They can work with the central bank.
Yeah.
So central bank says, I have a platform to move money, I'll do it. I have a way to print money, I'll do it. I have, multiple mechanisms to make it happen. The problem is people are realizing that, centralized institutions like central banks, right, are not evolving fast enough to meet the needs of what day-to-day people need, right? And this is where you're seeing more and more and more and more decentralization, right? Even if you ignore crypto for a while, right? Look at what is happening with,
Dogecoin.
No, you can look at multiple things, but effectively what is happening is people are wanting to do more and more things themselves, right? I mean, a great example for this, by the way, is the content. Right? Draw the analogy with content. Content 20 years ago used to be very centralized, right? 20 newspapers, 5 publications, broadcast channels, all owned by the government, licensed to do things. That's what it was.
And the other half by Rupert Murdoch,
But even Rupert Murdoch was a new phenomenon. He was privatization in a sector which was basically completely, state-owned. Right?
Nationalized,
So that came later. But now look at what has happened, right? As you land up getting more and more tools in hands of people, a podcast like this is possible, right? Two of us can sit here, have a conversation about topics that matter to us, and people who are interested in these topics can hear this without us having to go get a license, without us having to follow the more centralized
regulations,
approach. Not just regulations, the entire centralized approach, get approval, all the rest of it. And I think that's where the beauty of technology lies, right? Imagine if you are able to forget Share for a product, for instance, but other products like it, right? Which enable individuals to be able to service their tribe, work with people they care about, and do financial products with them. That's where the future is going to be. The future is going to be, the tagline we use for our product is 1 billion banks, right? But that's what it's going to be. It's going to be 1 billion individuals extending their financial access or becoming the bank for people around them. Because if you think about it, what is a bank, right? There's only 2 things. It gives you a payment instrument so you don't carry cash, right?
Yeah.
So you're carrying something apart from cash, and it gives you credit.
And this is what I want to ask you. In the video on your website, I saw an example of a girl who cannot get a loan from the bank, but with Share she can. So how? What is the story behind that?
Yeah. So again, think about this. Right? Interestingly, if you look at how borrowing happens across the world, right? 80% of the borrowing that comes in India, not by value but by volume, it comes from a friend and family member.
Yeah.
Right. And this is not just an Indian phenomenon. Across emerging markets, that's the case. 50% of all borrowing that happened during COVID in the US by number of loans came from a friend or family member. Mm-hmm. Right? So this is what always happens. And the irony is the following, right? For any loan or credit to happen, you need 2 things. You need cash to be able to lend, and you need risk appetite. Right? Like, I can trust you and I know you and I can give you a loan. The problem is all the cash is with the banks, but they don't have the risk appetite. So what do they do to get the risk appetite? They say,
no.
Or give me a credit score. What is a credit score? It's an artificial concept, right? You didn't, if you think about it, when I watch ads in the West about how to improve your credit score, I'm like, what the hell are you improving? What are you improving? Yeah. It's an artificial concept designed by banks to be able to tell you how much money you can get. The problem there is because the banks are the only one who have the cash, they are trying to build the risk appetite. But the beauty of community is risk appetite is already distributed, right? You can go to 5 friends of yours and say, look, I know these guys will back me if they have the money, right? If they have the money, they'll back you. Now what Share allows you to do is, imagine I'm sitting on a credit card. I have a credit card of 50,000 dirhams. Okay. I'm using only 10,000 dirhams of a credit card. There's 40,000 dirhams of credit limit that I have, which I can share with you. So I become the loan giver to you. I don't need to have the cash to be able to do it, but I can share my credit card limit, right? And that's how, these community transactions get empowered. Because what you're doing is you're not only using it to extend payment, but also extend credit.
No, that's the thing. But what happens if your family member or friend doesn't have money to return that loan?
But this is a risk you take all the time anyway, right? I mean, it's a risk you're taking. So it's a risk you're taking anyways, right?
Yeah.
So 80% of the borrowing that happens in the community, right? If it doesn't get returned, it doesn't get returned, right? But there's something else at play over here, right? You're far more likely to return the loan you've taken from a family and friend member than you to a centralized institution. The bank you'll definitely not return. It's a nameless, faceless thing. Okay, they'll do something. But with a family or friend, you'll do it, right?
Yeah.
And the other part of this is, right, a family or friend is much better capable of being able to judge whether you are a good creditworthiness or not. Everybody that keeps talking about all data and using AI to score, what are they doing? No AI and no all data can
put you
get
in some boxes and they put you in some,
But all the data, they cannot ever get as good as somebody who lives down the road who you have known for 20 years. You can be far better judge of a credit worthiness than any algorithm that anybody can design.
Do you know that my employee can take a car loan and I, as an owner of the company, cannot take a car loan? You know that rule.
And the problem here is one of risk appetite, right? And the risk appetite because, so effectively somebody sitting in a bank somewhere looked at the credit algorithm and said, people that own businesses are high credit risk, so I cannot give them a loan. Right? That's what it is.
Yeah.
And how does that get determined, right? It's an artificial algorithm.
I don't have a single loan. Nothing like. And they said, no, you cannot buy. I cannot buy. My employees can, and I cannot. Yeah. But that's the thing you are talking about, that's the.
But this is the problem of centralized institutions, right? Because they're nameless and faceless. They rely on you, right? On the data that you give. I mean, think of the number of forms you're willing to sign to get a loan.
Yeah.
They ask you, bank statement here.
Yeah.
They ask you, give me thrice attested proof that you live at that address, I'll give it. They tell you, go and get the proof of where your parents live, you'll go get it.
Yeah.
You're willing to jump through all the hoops. To why? To build trust, right? But if you know that somebody sitting next to you already has the trust, why the hell do you need the bank?
Yeah.
And I think that's where you're going to head. You're going to head to a place where it will be more community driven, like what this is, right? This is a level of trust. We sit here, we have a conversation, right? Why can't banking be this simple, right? Because, all the cash is sitting centrally. So when you distribute not the cash, but the ability to make the cash out.
To assess the account.
This is what happens. Yeah. And I think that's what excites us about Share, right? That we are building for a radically different future. We are not, there are, and again, I don't know if you saw the video, one of the most startling things for me when we started working on this is, there are roughly 35,000 banks in the world.
Come on.
35,000, roughly.
35,000 banks in the world.
They make about $1.4 trillion of profit.
Of profit on transactions, on
everything.
Commissions.
Think about that number. That's $2,000 of profit per person alive in the world.
Oh my.
And that is after, not being able to serve half of us.
Yeah.
Right?
That means 4,000 at least.
Massive number, right? Profits. Right? This is not like, this is my revenue, this is my profit, this is money going. And this is profit after I have got bad loans, after I have paid regulatory fines, after I have done everything, this is the profit. Right? And you're talking about change earlier, right? It's very difficult for an industry like this to change. Because for a bank, it's very easy to work with a very small number of people with a lot of money and lend to them and be comfortable and be happy. So they don't want to lend to anybody else. But, this is where if you take the agency away from them and give it to normal individuals, things will change, right? And that's what is so exciting for us about Share. But you can do some of that. You can at least start that journey, right? Long way to go, but you can start a journey where there is more power to the individuals, right? Rather than centralized institutions.
So the change will go in direction of decentralization. This is your take on that. And what is at what stage now Share is? Did you get any investment? Did you get any, seeding stage you are in?
So look, our existing investors behind Rise have committed, plus we have got a couple of new investors coming in. I know there is this, what I call
bubble.
Not a bubble, like what I call startup porn, which is basically people get super excited about what funding is being raised. So, we typically don't tend to talk about what funding we have raised and all.
Okay.
We tend to basically just execute
But in general, what is the?
We are well funded. We raised a recent round in Jan of this year, joined by existing and current investors. Yeah.
Let's not talk about investments. Let's talk about the job needs to be done. What stage you are in?
So I would say we are still pretty early, right? I mean, we are. So last month we were in the top app in finance across 6+ countries. Right? Actually 7+ countries, all of GCC plus Bangladesh. The week we debuted in India, we were number 3 in finance. The reason we were not in top 5 in finance last month in India was because of COVID. Because of COVID. So we basically said this is not the time to be trying to market a product. But we are still very early, right? We are confident about where we are. I mean, 500,000 downloads in 4 months is a lot across multiple countries. We are trending well. Now it's a hard work of making the product better, making the UX better, working with more use cases, making things happen. So it's a journey.
And of course, the marketing, the user success, like you want to educate the users and so on. So decentralization, soon the possibility of even extracting the cash or paying offline payments and everything. This is the future for Xare. And I think it's a bright future. It's a nice place to be. And by the excitement you were telling me about the Xare, I would say that you didn't regret about your big change that you make from the corporate world to the entrepreneurship.
Not at all. Not at all. I should have done it sooner. So
this is
everybody
we all
says,
say that. We all say that.
So one of the things that it's an anecdote, right? But if you go to the agency that Steve Jobs used for branding Apple in the original times, right? I think it's called Shiade, which is based out of LA, right? If you go to their offices, they have a little pirate flag that fly above the building, right? And they basically give you the entry pass has a pirate logo on it, right? Mm-hmm. And the story behind that is when these guys were leaving Shiade, these guys who left and went and founded this agency in LA effectively, while everybody was in New York. They thought of themselves as the pirates, right? Because the main agencies that were in New York were the Navy and these were the pirates, right? Yeah. And I think that's a fantastic analogy to think about life as a startup versus life as a corporation. Corporation is all about the Navy. You have hierarchy, you have processes, you have things. They work beautifully. They have very large ships. If you need to move the ship, 1 kilometer, there's set down processes, procedures, excellent training grounds, all the other stuff happens. But life as an entrepreneur is all about piracy, right? You take a raft, you put it together, you incentivize people to do things, you jump in the water and try and make something happen, right? And for the longest time, since, people started telling stories of the navies and pirates have always been the heroes, right? Pirates have always been where the adventure is, where the fun is. So I think life as a pirate is good, right? Life as a pirate is always exciting. It's not always as rewarding. It's not always as stress-free. But it is definitely more adventurous and more fun.
And more fulfilling.
Milind,
thank you very much for being in the Change Officer podcast. We're calling the Change Officer because people we bring in here are the real officers or pirates in your case of the change. And I think your story inspired a lot of people. And maybe we should ask someone if you're inspired with this story, leave a comment there and said, yes, I left my corporate job because of Milind. But don't thank him yet, until you get to your goal. Thank you very much,
Thank you
for being
Pleasure.
The Change Officer.
Pleasure being here. Thank you for having me.